Okay, la-li-da-di-da. Monday, August 13th, 2018, daily Forex trading strategy session. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Nice to meet you. My name is Wayne. I am the Chief FX Market Strategist for TradersWay. Please visit TradersWay.com. Give us an opportunity to earn your loyalty and respect through fast execution speed, world-class customer service, and competitive spreads. Or choose an ECN account, fixed spread account, variable spread account, whatever. So we are here for you. Let's light the candles, set the table, and follow the love. Go. All right. So markets are moving. I think it was Tuesday of last week. I led a discussion about VIX being very, 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 very low. And I said, hey, VIX is a measure of volatility, and it's telling us there's very low, almost none. And I said, could that possibly have anything to do with most of the trading market being on vacation? They're perhaps while they're on vacation, they're not actually trading, right? Right? And then I proposed, I said, hey, when they come back from vacation, is it plausible we'll get more volatility again? How many people recall that conversation? Yeah, that's just a futures contract. Any futures broker would do it. Yeah. And I said, well, you know, so all you'd have to do is buy it and you'd make money. VIX was at 11. I don't even know what it is now. But we got a lot of volatility by the end of that week, especially on Friday. We were talking about on Friday, the reason the market really popped was fear over Turkey and the issues spreading to European banks. And so that's a risk-off scenario, and the US dollar got really strong, the Swiss franc got really strong, the Japanese yen got really strong, and we went through all those charts. And we discussed it, right? But pretty cool. Did we know on Tuesday that I was talking about Thursday and Friday having volatility back? No, but it's very interesting that it did work out. We went from no volatility to extreme volatility. Okay. So anyways, kind of interesting. I think the most interesting part of it is that we had a very, very timely conversation. Went from extreme lack of volatility, extreme volatility, and we had talked about it beforehand. So that's really cool. All right, so here we are at gold, and going back to Friday's conversation, risk off put us in a scenario where investors around the world withdrew their investments and brought the money back home. Right? Our foreigners decided to buy safe haven assets like treasuries, right? So they bought US treasuries, they bought Japanese government bonds, but whatever. And so yen got strong, Swissy got strong, and US dollar got strong. By the way, if that's new to you, that type of flow, then write it down. Write this down here and now. Risk off, that means conditions in the global market or even a specific market, like maybe just the US, but in this case, it was a global macro issue. When market conditions are not for investment, when they're not favorable for investment, when things are bad, the US dollar gets strong, the Japanese yen gets strong, the Swiss franc gets strong. Conversely, if you felt quite good about the near future of global macroeconomics, that people want to do business and start new ventures and make investments in foreign lands because the returns are so great. Okay, in that scenario, opposite is true. The dollar tends to get weak, the yen tends to get weak, the Swiss franc tends to get weak. And that's where this idea, and you might have read about it, you might have heard about it, you might have heard me discuss it. There's risk on, risk off. Risk on, risk off. And that might account for the majority of decision making as a currency trader. What are the market conditions? If it's risk on, you know what to do. If it's risk off, geopolitical risk, there's a threat of war, there's some, I don't know, some shock somewhere, exogenous shock, then you want to buy dollars. And then the next question is, well, if you what are you going to sell off? Okay. And then once you load up on, let's say pound dollar short, then you can go pound yen short, then you can go pound Swissy short, and it's all the same thing, risk off. Okay. All right. So another consequence of that is the opposite of the US, or the anti-US dollar is gold. They have an inverse correlation historically. Correlations can do change over time and in place and situation, but generally speaking, if I can get the colors to change. There you go. If the USD is going up, okay, the relationship here is if USD is going up, gold tends to fall. Boy, that's a terrible gold. Anyways, okay. It's just the anti-dollar. Think of it as the anti-dollar. So if pound dollar is down, if euro dollar is down, if Aussie dollar is down, okay, then gold should be down as well. And that actually worked out really nice. Now, we were stuck with gold for a long time, weren't we? There's a few trading opportunities. This is a sell. This is not a sell. The 4-hour 21 didn't even really work for you. So this is not a reliable trade. Okay. And then this also is not a very reliable setup. It just shows you how quickly. And what I mean by not reliable is you are selling gold low. Now, you have price action that seems to be fine, right? So besides price action, everything else they're still mediocre, even though it's falling. Because you have to remember, as a seller, you prefer to sell high. The higher the price, the better, right? Well, that's not actually true because you don't want to, you want to sell high. Selling low is, you can be profitable selling low, but you face more risk. Okay, it's sort of like buying a house for too much money in hopes of selling it for even more money. Lots of people have made that work, and lots of people have not, right? So in this case, all you really have is price action. Now, the price action's good. I mean, it's fine. But everything else is a little bit frightening. La 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 la. Charlie says there's not much support until you hit way down there. Yeah, well, the thing is, look at other charts and see if there's support or resistance. So, like, if gold is falling and dollar is falling, then if gold is falling, sorry, and Aussie dollar is falling, then you can look for support or resistance on that kind of stuff, right? But anyways, yeah. Oil. We are now in the third half of the driving season. And in fact, in Georgia and maybe other parts of the South, kids go back to school in August. My kids have been in school for 2 weeks already. People everywhere else go, what? Kids don't go back to school until September. Yeah, our kids go to school in early August. Right. So anyways, it's the beginning of the end of the big driving season. So you can expect some demand to fall in the supply demand curve. And then do we know for sure yet if Iran is going to be taken offline again as far as oil supplies? Are they going to get sanctioned? Just a threat so far. That's what I thought. So that can also that could, well, why don't we try? Economists love models, right? Models and bottles, baby. Oh wait, that's stupid. All right. Price, quantity. Okay. And why does the demand curve slope down and to the right? Because if prices are high, you're only going to demand a small amount. If prices are modest, you'll demand a little more. If prices are low, you'll demand even higher. And then supply. If you product and the prices in the market are high, you're going to make a lot of money, but it'll also entice other people to start producing that same thing with high prices because they want to make the high profits. And eventually, supply will rise and price will fall. Anyways, so what was I saying? All right, demand could fall because of the end of the driving season. So you go from demand 1 to demand 2. Shift of the curve this way from quantity, we'll call it 4, to quantity, I guess 2 and 2. Okay? That means, oops, probably, I'm having trouble. So we went from an old equilibrium price of P1 to a new equilibrium price of P2. So you can see as demand fell, prices fell as well. See, demand fell from D1 to D2, so demand is down from 3 to 2.5, and that lowered price. But maybe, and I don't know if this is going to be, equivalently true, but let's just say something else happens. Iran is cut off from the world, and supply now falls from supply 1 to supply 2, so supplies fall now. Okay. And then what? Price went back. And we're back to this flip. So you could offset the low demand with lower supply and a new equilibrium point, and prices go back up. So the first part of what I'm thinking is we're getting closer to the end of the season, and so maybe demand tapers off a bit. I'm not talking about a radical drop, but people are going to be in the office all day, not driving to grandma's house in their SUV. Oh, I appreciate that. I didn't like it, but I had to go with it. So yeah, so what you could do is your equilibrium point moves and then it moves again, cause and effect, and we could just have lower supply, lower demand, and the same price. You see where I'm getting to? So you could get in a situation where maybe this drops and then there's sanctions and then it rises again, and we just get caught in the $70 a barrel type stuff for a long time, till the end of the year. Okay. But we kind of have that priced in already, don't we? That it's either going to rise here or rise down here. So more risk off scenario stuff. Risk off, again, being defined as not favorable marketing business around the world. Well, if new deals aren't getting done, if new products aren't getting made, if factories are not building stuff for Christmas, then there's going to be a lot less demand for crude oil, and crude oil prices fall. So you can get a strong yen, a strong dollar, a strong Swiss franc, weak gold, and weak crude. See what I'm thinking? And of course, Aussie dollar, weak Kiwi, weak CAD. So everything's sort of on plan here. Okay. We have to zoom way out on this one, and let's really back out here. And let's see if I can get rid of this old line, this old zone. Get rid of that. Okay, let's go into an hourly chart here. Check this out. Chickadee check, microphone check 1. Near the end of July, we had discussed this area being a sell, and the target is this line, and this aggressive target, this one right here. Look where we are now. We're on that red line. Let's zoom in. Now I got to turn the drawer off. There we go. Let's zoom in. That's funny, isn't it? Is that funny? Yeah, that is the monthly support to pivot. That's the big one. That's the big kahuna. Support 1, I don't really care about. You rarely hear me talk about support 1, except for maybe that's where you drop a stop loss or something. But I don't really care anything about it. But this is absolutely, totally, definitely, incredibly important. I've always made a big deal about it. This is where you're supposed to always 100% of the time, without fail, without a doubt, take your profit as a bear. So anyways, I just think that's crazy awesome because again, it is sort of the end of the world. The dollar is unusually strong. You know, the pound, the Bank of England raised interest rates and everything, right? Everything that should have happened. And yet some people probably think this is out of control. And then I look at this and say, oh my gosh, this is not out of control at all. Okay? Isn't that interesting? Going back to January now, remember this double top thing? It has now dropped from 144 to 127. That's a heck of a drop. Holy smokes, eh? Yeah, those are some real pips. So for those who are new to swing trading, I guess we should highlight this. You can see I have this as a possible, right? Um, bulls would have done this at the time, also weekly pivots. So we have that there, but you'd have to be a bull. If you're not a bull, of course, you wouldn't have done that. Oops, I wanted that to be red. So bears had this. Yeah, that's the bigger swing. And then on a micro level, right, there are two places to sell on this, right, on this Monday. You had this or this. And bears have permission to sell anywhere in here. Okay? And if you took that trade on the first day of the month, okay, it is standard operating procedure to make this area now your target. So if you were a bear, dollar, or sorry, the British pound, which I don't think is inconceivable. I think you might have been a bear, right? Right? I think it's very conceivable. And therefore, you are now done for the month of August. You have to load the pivot indicator twice. Okay, that's how you get it on there. Pivot. One set on monthly, one set on weekly. I know, right? No, it's not simple. It's brilliant. All right, so I don't know. So yeah, so if you were a bear, you are now done for the month of August. Now, some people want to counter trend this, and you have permission to consider it. I think maybe you should just take the rest of the month up, right? Yeah, Adrian, like 30 or 40 people have posted that it works in Internet Explorer. No, I know. No. All right. So yeah, yeah. Um, and then you'll say, well, Wayne, how did you know? And I address that every day, so let's address it again. There's no way in the world I would have possibly known it was going to rise there. That's why we discussed the possibility. So how do you get this right? Well, you decided long ago, maybe because of Brexit, or maybe because it's been falling, 1,500 pips earlier. Um, you decide based on your technical analysis or your fundamental analysis that you're a bear on the Great British Pound. If you had done that, this trade was easy. And that's it. But there's nothing on the chart to say, oh, this is, well, I guess on this chart, I should say. There's nothing on that chart that says, oh, yeah, this is for sure heading down. So I'm not trying to say, like, I knew it was going down. You don't know it. I don't know it. But if you're a bear, it's very easy to carry out bearish strategies because technical analysis actually isn't that complicated. It seems complicated when you're always behind the eight ball because you're looking at this to tell you what to do. Well, that's your mistake. So if you were a bear last week and last month before that and the month before that and the month before that, starting this month to be a bear and this week and today and in the next few hours, your trading becomes significantly easier to understand. It doesn't become easier, but let me give you an example. Okay, let's say you were a bear. Okay, do you sell here? No. I mean, that's it. Like, then what's so complicated? Do you sell there? No. Good. Then don't sell. Right? That's the part that gets easier. Okay? This was sell if you were a bear. We had talked about it. I highlighted it and stuff. And it had to do with guessing this. And we talked about where the market would close and where the pivots would move and all that kind of stuff. We kind of knew somewhere in here that should probably be, a top, and that we'd be somewhere in the next pivot sell zone. So you could have sold there if you were a bear. There's nothing to tell you to be a bear. There's nothing to say this will fall, except we are estimating where the August sell zone would be. And then on the very last day, we're on the pivot. And then the very, very first hour of the first day of August, you're right there. That's a sell, bro. And if that failed, you take another shot there. I don't know if this one's going to fall here. I don't know if that one's going to fall here. Both of these could have lost money. We don't know that at the time. It looks fantastic now. But if you had a bias and a strategy behind your, I wouldn't say this is complicated. I think we make things more complicated. But I think if you were a bear, selling there is actually very straightforward. You don't know if it's going to work when you pull the trigger, but you got the right, and you knew that that was the aggressive target. And this is where you should know you're supposed to get out of the market. You should be done. Now, this is an unusual week. Maybe this drops another 500 pips. I don't think so. I think you'll read about that. Maybe it will, but there's nothing there that tells me that'll happen. So really what you should do is get out, and that's another great reason why, even if you're a bear, selling there is a terrible, terrible, terrible idea. And that's why we have rules of engagement. This is a great, obvious area to sell as a bear. This is an obvious area to take your profit and be done for the rest of the month of August. Okay. I think that's cool. So let's take farther back. So what do you think? We have an X way down here. Is that where we're going? How could we put this into the analysis? You could say something like this. You anticipate the pound dollar rising at current price, or it'll fall down to this gray area, then it'll rise. Is that a reasonable hypothesis that we either get this or we get that next? Reasonable, right? Is there another obvious scenario that you think is likely? Keep following it, right. But going back to what we said earlier, okay, if that's your plan, you still cannot sell here. So where do you sell? What do you look for? You need to sell at resistance somehow. Okay? You need some sort of trade plan. Okay? So on a weekly trade plan, the weekly trade planners, this is a sell and this is a sell. Could we somehow incorporate that? See, if you were a bull, you were supposed to buy it right here. Not because of the monthly, because of the weekly pivot. And then you see the monthly pivot and you're like, oh my God, all these bears are going to take profit. So it just comes down to if anyone's brave enough to buy this, but you totally could. So I think if you thought this was going to fall to that further level, you still would want or prefer to have a trade like that. Okay? See what I mean? I think you'd want that pullback first, and oops, where did it go? This one. I think you'd want that first, and then target your way down. It's going to take a long time to get to this lower level, isn't it? So let's just rough it here. If today was the last day of the month, and it ain't the last day of the month, but if it was, you would want something like this, wouldn't you? So to get this area here, which is September's target, if you want this to be lower, we need a bigger range. So this tells us if this were to be true and this pivot profit zone drops down here, then we do have to dip lower to get the September pivots to widen. So how would we do that? So now we're really reverse engineering this whole process. So you zoom in a little bit. Okay. You say, all right, we need a lower low, but it's not going to happen easily. So it's going to fade, and then it's going to collapse. It's going to make a new lower low, and it's going to go to S3. S3 currently is, whoa. All right, S3 is there. So this is what it'll look like. Oops. And the low for the month of August will be 125. And then it'll rally, and then it'll drop again. It's only rallying because people are putting profits in the bank, right? So if that occurred and we get down to 125, then this pivot is going to be a weighted low close. So you got to go high, low, divided by 2, and then drop it. So this is the high. So that's even low. Yeah, so it's still, this central only drops there. So this just barely gets us down to our support. So this is what happened. So if you thought you were a bear on pound, you thought this was down, we already fell to the projected target. We're going to retrace. We're going to go back to the extreme target, fade back, and we're currently at next month's central pivot, assuming an S3 drop, and then a low, and then up, and then down into this area here, which is 121 to 120. All of that being hypotheses, right? Technical analysis now, okay? Technical analysis now is to try to confirm or deny your hypotheses. And that only gets us down to this area here. Maybe, I think, lower. I think it'd be more like this. For the bottom of the month of September. I know we're only on the 10th or something. No, we're on the 13th. We're on the 13th of August, and we're talking about the 30th of December of September. But if you were a bear, that makes sense to me. How do you get from this support to that support? That's what technical analysis tells you. Now, what if you don't agree with that? What if you thought the Brexit scare was overhyped? And that Turkish contagion to the global, what is it, $100 trillion market? Maybe people wake up and say, you know what, Turkey's not that important. And we just go along doing our business. Dollar would weaken, wouldn't it? And if Brexit is overblown, is oversold, maybe dollar's overstrong, and someone might think the opposite is true. Pound is fallen almost 2,000 pips. Maybe now is enough is enough. And as traders return from summer holidays over the next 3 weeks, they're going to see it like this. Well, if that's the case, then the price we're at now is critically important, isn't it? In fact, you don't want to see us, like S3, that's a mood trade type scenario. A mood trade puts you into keep selling, sell, and you're like, but if we get to S3, it puts us in a mood trade for the next 6 weeks. And you're a bull, so why would you want a bear trade? So it has to stay above S2. It has to. Otherwise, your bullish trade is dead. So what are you going to do? Now, first of all, if you find yourself going back and forth, like, oh, but it could go up, oh, it could go down. It's because you haven't committed to a side, right? It's not like you can hang out in the German trenches for a while and then say a Wiedersehen, and all of a sudden you're hanging out on the French side with the French troops, smoking cigarettes, drinking wine, eating cheese, dropping your rifles, and then saying, you know what, I'm sick of these French dudes, I'm going over back to the German side, right? Um, it doesn't work that way. You have to pick a team. No, S3 doesn't say anything. S3 is a level. Okay. I don't know. I'm broadcasting at this is at least 1080. I think it's 1080. So I don't know what resolution. Yeah. Uh, so what makes something drop like 2008? Well, what occurred in 2008? A pivot level? No, a total global financial crisis. Well, we don't have that, right? Well, I don't. So I don't know what you're reading then, Jay. So you and I would have to have a debate over it, and you'd say, "Well, look at all this evidence that I have," but I couldn't fathom what you would have. So I haven't seen any evidence of that, none whatsoever. I mean, obviously I can be wrong, but I haven't. So if you're like, it seems like a global financial crisis brewing up, I'm like, what? You're worried about those three countries? No, I don't think so. You know, it's really unfortunate because the world really wanted Turkey to sort of join or choose aligned with sort of Western capitalist points of view, um, and be part of the European Union and be part of this and be part of that. And lots of money was invested in Turkey. It's really a crying shame uh, to see the current state of affairs with Turkey. You know, and Erdogan on TV saying, you know, this is a plot against us, the Turkish people. Like, dude, no one's doing anything to Turkey. Most Americans have no idea where Turkey is or what Turkey is about or the history of Turkey. Nobody here knows anything about Turkey unless they know a Turkish friend, right? So it's not like a plot, the Western world's plot against Turkey. But that's what's been said on TV, and you know, it's against our currency, our people, our God. You're like, whoa, nobody has a so um, so it's really tough because every person I've ever known to have lived in Turkey loves Turkey, and every Turkish person I've ever been a friend. So how does a country get ruined, right? So, anyways, I guess I should get off my soapbox, but it's sad. But at the end of the day, I don't think it's big enough of a deal. Now, Greece is also one of those countries where it really wasn't that big of a deal, except every other European country at the same time was also choking on its own blood. And then there was almost nobody left in the European Union to save Greece, right? Because it wasn't just Greece going down, it was Greece and Ireland and Portugal and Spain and Italy. right? And all of a sudden, and then France was on the edge, and even Germany was on the edge, and the Dutch saved everybody. So we're in a much different world now. So, Venezuela, dude, Venezuelan oil production is something like 20% of, so it could just go away and no one would care. It's really, once again, sad, but socialism killed that country, not Western capitalism. So they have more oil than Saudi Arabia, and yet an average person on the street cannot afford to buy a can of Coca-Cola. In fact, Coca-Cola doesn't sell. Coca-Cola sells Coke in every country in the world except North Korea and Venezuela. So, anyways, and that's been going on a while. So, good luck, Venezuela. Fix it. Venezuela is a great place. The people are great. The food's great. The beaches and the sun and the palm trees, and what a great place. Too bad they screwed it up. I would really like it if Venezuela put their house in order. They could be one of the richest countries in the world. They should be the Qatar of Latin America. They should be the Qatar of South America, right? But they're not. So on and so forth. And, Greece is on its long-term plan to get its stuff together. But I'm not worried about that at this point. But it wasn't CIA. It goes way farther back than the CIA. Now, CIA didn't help anything, for sure, but the Russians and the Soviets and the communists, they were in way before that. And then way before, and then before that, it was the Spanish and the English raping and pillaging everything. Actually, I think it went CIA more currently, then the communists, and then who was it? I think the English were in there for a bit on their imperialism, but that was only a small period of time. And then the Spanish were in there raping and pillaging everything, of course. And so, yeah, okay, so for 1,000 years, people raped and pillaged everything south of the American border until you hit icebergs. Everything has been raped and pillaged, yeah. So let's fix it now. I don't know, maybe this is all part of the transformation. But sides were chosen, and, Venezuela chose socialism, like all of Central America did, and they suffered the consequences of picking the wrong team. And it's easy to say now that you should have just picked capitalism and you would have been fine. But when these choices were made in the let's say the depth of the Cold War, being sort of the most recent period that we're talking, it was not clear which. And just sort of an interesting food for thought, like we didn't know capitalism won until the Soviet Union collapsed, right? In 89 and 90. The interesting thing is the Soviet Union was on the verge of collapse in the mid-70s because they had not had money to invest into their infrastructure for about 15 or 20 years earlier than that. So you're like, the Soviet Union was actually not doing well in the mid, but you just keep pushing and whatever, and you keep factories going. And so anyways, but all of a sudden by the mid-70s, the factories were in disarray, totally obsolete. And the economy was about to collapse, and then the US screwed everything up in the Middle East, and then there was an oil embargo because they were raping and pillaging all the OPEC countries. So finally OPEC did everything, especially Saudi Arabia, did everything you could possibly imagine to avert this oil embargo screwed it up so bad. So anyway, so finally OPEC countries were sick of being raped and pillaged. So OPEC said, you know what? Boom! Oil embargo. Prices quadrupled. And Russia's sitting around like on the verge of, or not Russia, sorry, Soviet Union, on the verge of total collapse. And they're like, all we have to survive is oil. And oil went up 300%. And they're like, oh, thank God. Except, you know, they're atheists. So they're like, oh, thank Putin. You know, Putin was in the KGB, I think, at the time. But anyways, all of a sudden, Soviet Union was saved for another 20 years. Right? Amazing, right? Like, if things had just played out a little differently, if Nixon's White House wasn't so bad, and right, and we would have not had the oil embargo, and if we hadn't had the oil embargo, we wouldn't have massive inflation throughout the United States and you know, all that kind of stuff. And the Soviet collapsed, and we would have had peace and capitalism for 20 years or 25 years longer in Russia, and all those border, you know, Iron Curtain countries would have been freed 25 years earlier, like a whole generation earlier. It's like, wow, it was, the world had such a different destiny, and things just skimmed off the surface, and we had another 25 years of Cold War. So anyways, so at that time, we still didn't know whether capital or not, right? So long story short, you know, you had Cuba and Venezuela totally said, you know what, let's totally go communist, socialist, pig dog all the way and see how it goes. And yeah, there you go. Unfortunately, Saudi Arabia has more, or sorry, Venezuela has more oil than Saudi Arabia, and should be a fantastic, amazing place. And I think it will be. But yeah, we need to fix these things. And yes, Latin America is lagging. Yes, they were raped and pillaged for 1,000 years. But I think it'll be a better place in the next 1,000 years, hopefully. Well, okay, so yeah, Soros is only totalitarianism and tyranny. But you know what? That is the next question, where capitalism and entrepreneurialism I put together, I think has proven absolutely, totally the model that works. Okay? Democracy, I don't think has been proven to work yet. So you can have a tyranny of a government, right? That's, so you could have communist China, communist capitalist China win the game. Now, I think they got their own problems coming up, but just as an argument, let's break it down like if you were to play war games or economic war games or whatever it was. If you could take democratic capitalist system versus a communist capitalist system, like command and control capitalist system, and go head to head, command and control is just easier because it's like CEO of a company. Because this is our direction, this is our vision, and if they're a good CEO, they can get people to follow and believe in that vision, and they go. And they go that way together. And everything and every department and every person is all leading toward that. And that company takes over markets and crushes the competition, which is slow and sort of floating around without direction or vision, right? Well, if you had a Fortune 500 company with 50,000 employees, and they all sat around debating what they should be doing, how well does that work? Or if you have a team of the world's greatest athletes and they're all sitting around debating what they should be doing, no, but I'm talking, Ross, I'm talking bigger than that. I mean, we're talking about economics and social systems here. So anyways, yeah, so having visited China a lot, it's very interesting from an economist's point of view. How do you compete with that? I'm not saying it's better. I'm not saying it's right. I'm not saying there isn't loss of freedoms and stuff like that. That's not what I'm saying. I'm just saying it's going to be very difficult to compete against. If the whole country says we're going this way the next 5 to 10 to 15 to 20 years, how do you stop it if you're like, well, that's not the direction we want for you? Good luck stopping that. The United States can't even build like a new highway, a new a new train line from Northern California to Southern California. It's incapable to talk about it for 40 years and never do it. Right? So it's going to get very, very interesting because the world's not going to so much be focused on socialism versus capitalism, the worker versus the banker kind of thing. It's going to be democracy versus communism or something like that. And I bet you the ultimate winner 1,000 years from now, or even 100 or 200 years from now, is some sort of in-between hybrid. Anyways, yeah. So if you're going to buy this, buy it, right? Whoa, what do you mean buy it? Well, drop into a small time frame. You have the price. Do you have the setup? It's setting up. So are you going to do it? What do you want to see? This would be amazing, wouldn't it? Right? Wouldn't that be great? You buy it here. You put your stop down here. Yeah, Emilio, I agree with that too, but something's changed. That vision was fantastic, wasn't it? So we need to get there, but in the last, I think it's fair to say the last 20 years in the United States, the government has essentially been frozen. There's no, and then when I talk to people about China and their 5-year plan and revising their 5-year plan, I'm like, what's our plan? Do we have is there even a plan in the United States? And I'm not talking Trump. I'm talking all the way back. Let's say I moved to the United States and Clinton was, so let's go all the way back to Clinton. Is there a written plan? Is it like there's a written business plan for the United States of America? You're like, really? Where are we going? Like, so I kind of like what Trump's doing in the sense that we're renegotiating agreements that were made 40, 50 years ago, and the world has changed. So it's time to renegotiate these things. I get that. That's cool. But I'm talking bigger than that, not just that's great to let's just sit down and renegotiate our trade. Okay, good. But where does that fit in the plan? And then what's the next step after that? And then what's the next step after that? Like, instead of just like focusing on like what can we change? Let's change healthcare, and then I'll lose my presidency. And then we'll do the taxation thing, and then then there'll be a new president. And every president just wants to grab a legacy. But what about the plan, right? Yeah, yeah, I mean, but you'd have to have a president that would want to do that. But right now, um, what happens is whatever the president of the United States says, and it doesn't matter who the president of the United States is, just the president of the United States says, I want to do something, and then half of the government refuses to even get in the same room, refuses to even talk about it. In fact, instead of just even refusing, will walk in and do everything they can to destroy it, and they don't even need to hear what the idea is. It doesn't even matter. So that's where we've been for 20 years. Right? So anyways, so I think that brings weakness. I think if the competition pulls their stuff together, it's going to be very difficult to compete. Very difficult to compete. Okay. All right. So all I'm saying is, if you're a bear, you can't sell here if you're disciplined, and if you're a bull, you should be setting something up. You might have even already taken the shot, just treated it like a pentabottom, dodecahedron bottom. Great. And you took the first shot. Great. That's just basic analysis, right? We'll look at this. Aussie yen. This is the projected low for the month. Oh, we hit it. Oh, it bounced. Great. Are you a bull or a bear? If you were going to bear this, you'd be selling soon. Because compared to the other, I think it was pound, we said we need it to rise so that we sell it. Well, it has been rising. So now if you're a bear on Aussie yen, you want to identify the next price in which you will consider selling. It could be something like near the psychological level of 81. It could be a level, I suppose you do it this way. Which is the same thing. Roll reversal, an old pivot. I drew this gray area so long ago, but that's a roll reversal. Let's try and make this a little better. And then there's another one up here, isn't there? Okay, so anyways, let's drop back in. So you could say, all right, cool, I got something to do today. I'm a bear, and I see green candles. Good. Awesome. Amateurs are tracing this, but so you're setting it up, and you're a bear, so you think it's going to fall. So somewhere between right now and the end of the day, you're going to sell. Maybe here it turns south. If it turns south, doesn't mean you turn it south. But you drop out of a 1 hour chart, maybe into a 15 or a 5-minute chart, and if it shows weakness, you sell it. Boom, 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 boom. The next one's kind of up in here, and the next one's way up here. So you know that ain't going to happen today. So you're 25 to 30 pips away from selling. So you're approaching your kill zone. You got that? If that doesn't work, your next opportunity is way the heck up here, but you're not going to get that in New York, right? It's not going to rise that far, is it? I mean, you're practically talking 82. So is it going to really go up? I mean, it could. So so now you plan it. You got some plans. You got a strategy. What's your strategy? So around these areas. Okay, cool. That's your strategy. Tactically, do you have an entry? No. But what if you dropped here? What if you sold the next 5 across down? That would be a tactical entry, right? Right? So it went like this, this, and then this, and then you get your 5A cross down, wouldn't you? What do you think, guys? Yeah? What about bulls? Well, you missed like quadruple bottom at a pivot point in your take profit zone. So you had a ton of opportunity already. Okay. There was a higher high, higher low. I think you saw that, right? Maybe I should just draw that up for you. You had this one already. So what do they call this? A cup with handle or some stupid name. Um, anyway, so there's down, there's a bottom right where you'd expect it, and then the higher high, higher low breakout, right? You would have had this as your low. You would have had, this area as your high. You break out, pull back, roll, reversal, gone, right? But if you were like hungry for Aussie yen long, there were some good trades in there. Okay. They call it company with the handle, right? Yeah, yeah, the rand. So rand with gold falling and dollar rising, I would assume dollar rand looks like a rocket ship skyrocketing into the heavens. Take care, Alan. See you tomorrow, buddy. So, and it looks like I think I babbled on too much about socialism and stuff. I apologize for that. But we've run out of time. It's already almost 9. But yeah, no, I don't. And there's some serious compliance concerns about that. So I don't know. But I'll work if that gets pushed off or turned off. First of all, well, long story short, I'll find a way. I would hope that I could find a way to do it in a way that doesn't get anybody into trouble, so to speak. So who knows? Maybe I'll do it as a $1 course or something. I don't know. But it'll get done. But lawyers have to ponder and discuss these things with each other. Um, so we're working on it, buddy. Okay. Okay, Frankie boy. Yeah. Yeah, it's a complicated world. What can I say? It's a very complicated world. Yeah, no, it really is. But that's the world we live in and all that kind of stuff. And nobody wants, to get in the cage of the cougar. So um, let's just be patient. And if if they can't do it, then I'll discuss ways that maybe can do it. Yeah, it's a complicated world. It shouldn't be, but it is. So, anyways, peace on earth. May the pips be with you. May your profits be above average. I love you, and I'll see you tomorrow. Namaste. Be careful with the lira if you're doing that. I'll see you Tuesday and Wednesday and Thursday and Friday and Saturday, Sunday. Cheers.